Hi, I'm Jamie Bubb-Sacklyn, a chartered financial planner from the UK and estate planning specialist at Melbourne Capital Group, based here in Malaysia and covering the Southeast Asia region. Are you curious about the fate of your possessions when you pass away? The days when inheritance tax was applicable to the wealthiest in the UK are long behind us. Today, I'm going to explain a little bit more about UK inheritance tax and how it affects you. So, who is inheritance tax applicable to? Inheritance tax is applicable to UK domiciled individuals, such as Brits living abroad or in the UK, who have assets above the nil rate band of £325,000. It's also applicable to international investors with assets in the UK, such as UK property. Before I go any further, if any of the above is applicable to you and you're based in Kuala Lumpur, we are hosting an inheritance tax seminar on the 22nd of June. Feel free to click on the link in the description below for more information. So, what is your estate? Your estate is effectively all of your assets, so your property, your investment accounts, your cash, your possessions, and then the value of those is your estate, and you need to offset any debts that you have, such as mortgages or liabilities. If your estate is then above the nil rate band, UK inheritance tax is applicable at 40%. Now remember, it's worldwide assets, not just assets in the UK if you are UK domiciled. If you're an international investor, then it's your UK-based assets, such as property. There are some exemptions and reliefs available to you. For example, if you're British and married to another British domiciled individual, you can pass assets onto your spouse free of any inheritance tax. The same applies to giving assets to charity. Anything that you give to charity is free of IHT as well. Also, if you have a property and you pass it to your children or your grandchildren, there are also exemptions there, along with other gifting exemptions, which we'll go into in more detail later. It might be pretty disconcerting to think that your lifetime savings and hard-earned cash could be going to the taxman rather than your chosen beneficiaries. However, inheritance tax is deemed a voluntary tax because with careful planning, we can help you to mitigate this. In the next video, I'm going to go into more detail around ways that you can potentially reduce your inheritance tax liability. But for now, if you have any questions regarding UK inheritance tax or succession planning, please feel free to contact us. I'll be speaking at an exclusive inheritance tax seminar in Kuala Lumpur on the 22nd of June. So if you're a British expatriate based here, or if you have assets in the UK in excess of £325,000, do not miss this opportunity to come and meet with me in person and share your questions, and I'll go over as many as I possibly can.